Earlier this week, I sent out alerts. We've been taking a lot of money off the table to take profits in our model portfolio on Astera Labs, ALAB, and Vertiv, VRT. Very popular stocks. They've done extraordinarily well, but they both went up a lot the next day. So I took some heat from subscribers. They lamented, hey, man, we left some money on the table. I can tell you, I've been doing this close to 40 years. I know I don't look that old, but this isn't new. But it mostly happens when the market gets really frothy and investors get very spoiled. I mean, looking down at your nose at like a 35% profit in a few weeks means that you've kind of just put risk on the shelf. Selling is hard, especially when there's two times, when you're taking a loss or in roaring bull markets. So I reminded our subs this morning that we closed FICO. A big loss. It was back in May. We took a pretty good loss on it. It was up a little bit the next day, but we closed it above 1,900. It's down more than $600 since then, right? Down to 13 and change. So the bottom line here is it's much better to look forward for fresh opportunities rather than torture yourself about what you might have left on the table. I want to bring a Key Advisors Group CEO, Eddie Ghabour, because Eddie, you've been dealing with individual investors for a long time. I want to get your sense because when things are going to get choppy, a lot of people have gotten spoiled here. What do you tell people when they start to get frustrated about leaving money on the table or the wild swings they may have to endure?
Look, I think investors have to understand that market dynamics post-COVID have changed, and you just buy and hold and forget about it, in our opinion, doesn't work. To your point you just made, I think investors need to be really active in how they manage their portfolios and be extremely disciplined, not just using fundamentals, but also using technical analysis. And if you hit a grand slam, don't be greedy. Take some off the table and get ready for the next opportunity. And we've done that as well, too, by raising some cash over the last few weeks. And we said that we felt like with the strong dollar and the big run we've had, that August and September was going to be tougher than the prior 2 months. But we think they're going to be great buying opportunities to set up for what we think will be best in the fourth quarter, as well as going into 2026. So it's a matter of taking that capital from something that you don't think is going to outperform where you're going to be deploying that new capital, and that's critical.
So, I mean, listen, again, you were like a raging bull, right? You were pounding the table. It worked out well, particularly when almost everyone else was negative. And so as you reposition, what are you looking for, in terms of, okay, softness? A lot of people were looking for softness. August is weak. Historically, it's always weak in a presidential second term for a president. September sometimes can be even worse.
Charles, I don't think this correction is going to be as big as many people think. I think one thing we've learned is that the word tariff, when you have these temper tantrums in the market, has been nothing but a buying opportunity this year. And so because so many people missed their rally, there's so much cash on the sideline, I think they're going to be forced to performance chase and buy in these dips. So we don't see anything steep. So we're looking at things like crypto and tech and home builders and things that we think will do really well in a booming economy, because we believe that people are underestimating the strength of this economy over the next 12 months. We have a liquidity that's going to be hitting this marketplace that's going to be amazing, because you're getting liquidity in an economy that's not going to be going into a recession. There's a difference between a softening economy and an economy that's in a recession. So we think we're going to boom, and that's going to really start to materialize in the fourth quarter.
Yeah, it's interesting because you already talked about how the dollar had a strong July. Bonds now, the bond yields are pulling back. The stock market rallied to an all-time high. Talk of American exceptionalism being over was somewhat premature. I would suspect also people who put money behind that trade might want to start to look back here. So you've talked about buying big tech names in your note, but buying them on a dip. Anytime I get a guest who says buying the dip, what does it mean for you? Because the dip, dips have been hard to find recently.
They have, and it's about your positioning. So, for example, we've been at max position in Microsoft all year, and that's been a home run for us. But we had a minimum position in Amazon. So today, with an 8 to 9% drop in a big cap name like Amazon, we doubled our position in that today. And so if we're at a minimum position and we get a big drop, we're going to take advantage of that. And we think there'll be some follow through on the selling potentially Monday and Tuesday. And we've left enough dry powder to continue to buy in the areas that we want to gross up going into the fourth quarter.
All right. And of course, for those who are on radio, it's NVIDIA, Amazon, Microsoft, and the Qs. I got to ask you about the home builders, right? They caught a bid last week, some of the home builders, and you like the XHB here.
That's a real contrarian play. This area has been beaten up And we believe that going into next year in the fourth quarter, the trend is going to be a reacceleration of growth. And we think interest rates are going to trend down. And we have not enough supply of housing in this country right now. And we believe that the housing stocks have bottomed. And we believe that the trend of interest rates going down is going to get housing reaccelerating again. And 2026 has the potential to be a really big year. But we think that it's sniffing it out now because it's forward looking. So we'll start really getting rewarded, we believe, in the next 2 to 3 months in this area.
Yeah, I see D.R. Horton and some of the other ones are really starting to percolate even last week. Eddie, it's been far too long, my friend. Thank you. Have a great weekend.
Thank you, Charles.
All right, see you soon.